Hey everyone, welcome back to Corporate Decoder, the place where we decode the complex world of business and finance. And let me tell you, this National Healthcare Corporation filing is quite the read, especially when you see how their business has been doing. Alright, let's dive straight into what National Healthcare Corporation, or NHC for short, has been up to. This report covers their performance for the fiscal year ending the 31st of December 2025, and it gives us a peek into how they're doing across their many healthcare services. NHC is basically playing in two main arenas in patient services, which include skilled nursing homes, assisted and independent living places, and even behavioural health hospitals, and then their home care and hospice services. They also have an all other category for things like rental income and insurance services. Now, let's talk about the money for the year ended the 31st of December 2025. Their total net operating revenues and stimulus income hit a hefty $1,517,781,000. That is a massive jump, about 16.1% higher than in 2024. A big chunk of this growth came from an increase in how many people are actually using their skilled nursing facilities, pushing that overall census up to nearly 90%. They also saw a nice bump in revenue from some of their government payers, which is always good to see. But with more revenue comes more costs. Total costs and expenses really went up, climbing to $1,389,429,000 in 2025. That is nearly a 14.1% increase from the year before. A lot of this rise is tied to their people costs like salaries, wages, and benefits, which jumped by over 13.6%. Even with that, though, New Hampshire C is managing to keep those costs as a percentage of their total revenue pretty steady, which shows some cost control. The big story in their expenses is salaries, wages, and benefits. They went up by $110,150,000. Now, the company did mention they've been facing workforce shortages, which often means paying more to attract and keep staff. But here is an interesting point. Their agency nurse staffing expenses actually went down significantly by about 66.6%. This tells us they are likely hiring more full-time staff, which is usually more cost-effective in the long run. Other operating expenses also saw a jump, up 17.4%. This was partly due to their acquisitions, but they also pointed to unfavorable claims activity within their professional liability insurance. This means more money being spent on insurance-related issues. Despite the rising costs, their income from operations actually soared by a very impressive 42.8% in 2025, reaching $128,352,000. This strongly suggests their revenue growth and cost management efforts are paying off. Now, looking at their investments, they had some pretty big swings. They recorded unrealized gains on marketable equity securities of $22,344,000 in 2025. That is a decrease from the previous year, but still a positive contribution. It seems they're holding on to investments in publicly traded healthcare real estate investment trusts and other strong companies, which can be a good long-term strategy, though it does add some volatility. Their non-operating income, which includes things like interest and dividends, was around $18 million for 2025. This provides a nice little boost to their overall earnings. Putting it all together, their income before income taxes came in at $162,432,000 for 2025. That is a solid 19.1% increase from 2024. And for us shareholders, the net income attributable to National Healthcare Corporation stockholders was $120,015,000. This is a strong 17.7% rise from the previous year, showing good profitability. It is important to note how many shares of stock are out there. For 2025, the weighted average common shares outstanding for diluted earnings per S-Hair was about 15.6 million. And for those who like income, the dividends declared per common share were $2.53 in 2025. This shows a consistent increase over the past few years, which is a positive sign for patient investors. When we adjust for some of the one-off items like those unrealized gains in stock-based compensation, their non-GAAP net income for 2025 was $104,067,000. This adjusted figure also shows a significant increase from 2024, reinforcing the story of operational strength. Now, let's quickly look at their cash position. At the end of 2025, they had a healthy $112,187,000 in cash equivalents, restricted cash, and restricted cash equivalents. This is up 15.7% from the previous year, and their cash provided by operating activities was really strong, $185,078,000 in 2025. That is a big jump from 2024, showing that their core business operations are generating a lot of cash. A significant event in 2024 was the acquisition of White Oak Manor, which added $215,896,000 to their cash used in investing activities. This acquisition clearly played a big role in their growth and financial picture going into 2025. On the financing side, they repaid $97 million on their credit facility. This shows they are actively managing their debt, which can be a good sign for financial health. One area that always warrants attention in healthcare is risk reserves. Their accrued professional liability and workers' compensation reserves totaled over $121 million at the end of 2025. This is a pretty substantial amount, reflecting the inherent risks in providing healthcare services. The company is self-insured for a lot of this, meaning they're on the hook if claims exceed their reserves or insurance coverage. This is definitely something to keep an eye on. Their tax situation is also interesting, with Tennessee playing a major role in their tax effect due to state and local jurisdictions. Now, there are some serious risks mentioned in this filing. A major one revolves around their lease with National Health Investors, Inc., or NIIT it appears. There are some disputes over whether NHC is complying with non-monetary terms of their lease agreement, and NII has even alleged default. This is a pretty big deal because it could potentially affect their right to operate many of their facilities. They say they dispute any default, but the uncertainty is definitely a risk factor to watch. Another huge risk common in this industry is their reliance on government payers like Medicare and Medicaid. Changes in reimbursement rates or methods could really hurt their revenue and profits. They're already dealing with some automatic spending reductions from a law passed a while ago, and these cuts are expected to continue. They also face risks with payment caps for their hospice services, which could force them to pay money back to Medicare if they exceed those limits. Then to ease the move towards value-based purchasing, this means providers are being paid more based on the quality and efficiency of their care, not just how much care they provide. While this can encourage better patient outcomes, it also means that if NHC doesn't meet certain quality standards or perform as well as competitors, their payments could decrease. It is a complex shift, and it is hard to say exactly how it will play out for them. Finally, like any public company, they have to maintain strong internal controls over financial reporting, as required by the Sarbanes-Oxley Act. They received an unqualified opinion on this from their auditors, which is good news, but it is a constant effort to keep these systems effective. So, what is my take on all this? NHC is clearly growing, with strong revenue increases and solid operational income. The acquisition of White Oak seems to be contributing positively, and they're showing good progress in controlling some of their costs, like agency staffing. However, the disputes with NI and the ongoing risks associated with government reimbursement rates and the shift to value-based care are significant factors that could impact their future. They seem financially stable with good cash flow and a commitment to dividends, but the healthcare regulatory environment is always a challenge. What is your view on NHC's performance and their future prospects? Let me know your thoughts in the comments below. If you found this analysis helpful, please give it a thumbs up and subscribe for more deep dives into corporate filings. Don't forget to jump into our Discord community, linked down in the description for more discussions and insights. Thanks for watching, and we'll see you next time on Corporate Decoder.